All right. Hey guys, Brad here at Elliott Wave Made Simple. And today we're going to look at the trifecta. We're going to look at silver, oil, and natural gas through the lens of Elliott wave theory. We're going to start with the daily view, and then we're just going to hop right down into the lower time frame charts and look for the actionable levels. Now, if you're new to Elliott Wave, don't get caught up in the complexity of what I'm about to show you. What I want you to focus on is the parameters. One of the great advantages of Elliott Wave is once you understand how to perform the analysis, you're going to end up with these parameters so you know where your assumptions are wrong. We're going to show you certain levels on all three of these instruments, very simple, so you know where you're wrong. You know where the floor is, you know where the ceiling is. All right, let's dive into the silver chart. Here we go. All right, so this is a daily chart. And in an effort to keep it really simple, I'm going to go back in time as after the 2020 debacle, where silver crashed all the way down to like $12 almost, or dipped below it in the futures market. So considering this as a 1, 2, and then now we have another 1, 2. And then now, guess what? This is what we call in LA Wave world a nested series of 1, 2s, because it keeps building the potential for an amazing move higher. And what it's doing is it keeps giving us an additional 1, 2. This is the second 1, 2 here. And then this very complex in here, moving in threes. Also, without making your head explode, silver is moving up in a diagonal. This initial move off the low is a diagonal. You know, I'm always talking about how wave 4 may not encroach upon the wave territory of wave 1 in order for it to be a standard impulse. So what we had is a 1, 2. This is a 5-wave move up for wave 3, and then a potential 3-wave move for wave 4. But the issue is this wave 4 extended beyond the top of wave 1, which disqualifies it as an impulse. But once it finally did bottom, look at this reaction. It came up and made a new high in 5 waves, which is consistent with a 5th wave. So the best way to think of this is as a diagonal. What does that mean? Well, it means that the targets are going to be different, and it means that we have to be paying attention for this thing to be moving in threes and or move in a complex manner. And guess what? That's exactly what we saw, because after this diagonal up, we will call this a leading diagonal because it's in the position of wave 1. Afterwards, we got a massively complex, but it's moving in threes. 1, 2, 3, 1, 2, 3, 1, 2, 3. And even inside of this one, you can see another 1, 2, 3. And then here's another 1, 2, 3. And then guess what? We get a 5-wave move right at the end. 1, 2, 3, 4, 5. So actually, this is what we're thinking of as the bottom of wave 2 that goes with this one. So this is the last setup, the 1, 2 setup. But guess what? Then we got another 5-wave move for another wave 1 and another wave 2. And then now we're up off of that low. So on a nano basis, now what we're going to do, nano just meaning smaller time frame, we're going to jump down onto the lower time frame and look at this area right here to get exact with it. We're going to dial in. We're going to look at the structure right here and come up with some parameters. Now, a large parameter, like longer term parameter, top level view on the daily chart is going to be 26,505. That's the last swing low from earlier this month in August. 26,505 is the immediate number that bulls do not want to see price get below. That's going to be a game changer. It'll change the structure. We'll have to reconsider what is going on at that time. But for this moment, everything that's happened off of this low, really going all the way back to 2020 that I just showed you, is bullish. There is not a bearish structure in silver. So what we are looking for now is parameters, and I just gave you the first one, 26,505. Another decent parameter, I think we should call it, is 28. Price can come back down into this zone without wrecking anything. It doesn't change the game at all. If it gets much below 28, and actually I'm going to go ahead and stretch this out a little bit so I can see the top, considering this the 1, 2. So we do not want to see price. This is your second parameter on the longer time frame. 28.17.5. Ideally, price does not get below 28.17.5. By the way, I'm in the front month contract in silver and the futures in COMEX. So there are your two parameters to the downside. You do not want to see below 26.505, and a higher up parameter, you do not want to see below 28.17. So that leaves us focusing on this area right in here. So now what we're going to do is hop down onto the lower time frame. And by the way, this is worth noting right here. So just as a guy performing work on candles is going to look at the daily, maybe the weekly even, to get a lay of the land, and then drill on down to the 4 hour and then the 1 hour, maybe use some technicals for sure, maybe some volume studies. But then when you get down, if you're a day trade scalper, you're on the 15-minute chart, but you're keeping in mind what you were seeing at the higher parameters and then bringing that with you down and drilling down into the actionable area. Same thing in Elliott wave. So what we're doing right now is drilling down into what we call the smaller degrees. I just showed you the higher degree structure on the daily, and now we're going to hop down back into a much lower time frame, or in Elliott wave speak, we call that a lower degree. This happens to be a 13-minute chart. So the structure that I'm looking at right now is this is finishing off this correction as an A, B, C. And inside of that A, B, C, the substructure, wave C, which I believe we just completed the wave 3 of C. Now, here's what I like about Elliott wave. It gives us parameters so that we know where we are wrong. In this case, if this is the bottom of wave 3, let me put some labels on here just so you can see what I'm talking about. If this is the 1, 2, 3, you do not want to see wave 4. It's not a wave 4 if it comes up into this box much higher. Okay, and really what I'm thinking, and who knows about the timing? Timing is the least likely thing to be able to predict. Timing is very difficult. These are timing fibs on here. I'm not going to get into that for the purposes of this video. What I want you to think about is if it gets above the level of this wave 1 right here at 29.60, I'm going to consider that a ceiling of sorts. What I would really like to see early in the week is the price come back up into this blue box and not get above 29.60. Now, if it does get above 29.60, it is not out of the realm of possibility that this is the low. Now, do I think this is the low? I don't. I happen to not think that that is the low, but it certainly could be the low. And how are we going to know? Well, one clue for whether or not this is going to be the low or not is the first clue is we're going to get up above this red line. It's highly unlikely it's a wave 4 if price comes up. Okay, so that's the parameter that's going to help us determine how likely it is whenever this bounce terminates, are we going to get one more low? Okay, so here's another parameter for you to write down if you're playing the home game, following along. 29.60 in the COMEX front contract. This is December, the December contract in silver futures. 29.60. If we get above there, there remain two additional options it could be. One is a B wave, in which case we're going to get a wider and deeper wave C, which is really going to be a wave 2. It can be a shallower wave 2, but if this gets a B wave bounce and then gives another pullback that comes further down and gets below 28.50, then it is likely that that is going to be wave 2. This right here is the next area that's going to provide the clues. So what ideally I'd love to see is that price does not get above 29.60, moves in 3 waves in this wave 4, somewhere in this blue box in terms of timing. If it gets past this line right here in terms of time, which is Tuesday, September 3rd, that's a week, more than a week away in the future. If price keeps moving sideways or gets above here and breaks across this line, it is no longer wave 4. So that's another clue, right? So I am, even though I just said timing is the least likely thing to follow, there is some guidance given by Elliott wave. And I won't get into that, but I'm just mentioning that's what these two vertical lines are. This is the ideal area for wave 4 to terminate. If it gets past this line and it's above here and gets over into, in other words, if it gets over into this area right here, then it's not a wave 4. It's either going to be a B wave. It's either a B wave or it is the bottom, the low is in. I'm just trying to move this. There we go. So this area right here, if price gets into that area, it's going to give us the next clue as to whether it's a B wave or the low is in and we're going higher. So I'm just going to make that green. So that's the deal. And then the ideal target, if this does come up into this box, I'm going to take a measurement to dial in more exactingly where this wave 5 may be. But as of right now, if price were to come up into this blue box and terminate somewhere around this 382 right here for wave 4, which is a very reasonable target for wave 4, and then begin to decline, this is the target for that. 2879 would be like the perfect C wave target. Also worth noting, you know how I keep my ABCs in yellow, and I keep the Fibonacci levels that go along with an ABC. I keep those in yellow too. I'm very consistent about this. So the ideal termination point for a C wave is anywhere between the 100 fib and the 1382 fib. That is the ideal termination point for a C wave. So my thinking is, because of the measurements of this current structure, it's really going to be 2879. And if it bounces here as a B wave, and then I'll remeasure for where a C wave can terminate, we'll have a different set of yellow fibs, and they're going to be slightly lower over here. So one step at a time. There's your parameters, 2960. That's the really, honestly, that's the main parameter for right now. Is price going to come up and get into this blue box and get rejected? Okay, so there you go. That's your silver parameters. And by the way, just last thing, why am I spending so much time tracking silver and sharing these silver charts with you? Because where we are likely headed is somewhere up here, 35 to somewhere in this zone. Not going to be a surprise at all if you end up with a massive wave 3 soon, and you're going to see 35. So that is the reason for all this attention on silver. I have a swing long position from lower levels. All I've done is trade a couple of times around the core, taking off positions and putting them back on. And then I have a different account that I can short, but I really don't like to short metals. Much prefer just to take something off and then put it back on at a low. And I've already done that a couple of times since this low over here. So that's the deal. Now, we're going to go ahead and look at oil now, another favorite. All right. I'm going to make chapters in this video so you don't have to search through the whole video. I'm just going to link directly to the next instrument. In this case, it's going to be crude oil. So again, we're going to look at the daily chart of crude oil first. And what we have here is, oh, I changed my charting to continuous. And also, let me make sure I'm not on log. Okay. So basically, what I'm really looking for here is we're in a downtrend, and I think we're in a B wave. So the idea is, did this already terminate down here, or do we need to get a little bit lower before any sizable bounce? And the idea is, let me put that trend line back on. You can kind of see the shape really of this structure. It resembles a diagonal. Now, I'm not going to get in the weeds of what an Elliott wave diagonal technically should really be, but I am just going to throw on a couple of simple trend lines to highlight the idea that the range is tightening down here, right? We got a bounce, you come down, you go up, because each time it makes a higher low, then it makes a lower high, then it makes a higher low. Now here it made a lower high, but it made a lower low here, but it held more or less this trend line. Actually, if I really want to be technical, that trend line is more like that. So it just cracked below it. So in a sense of a diagonal, this would be an A, B, C, D, E, back up to this trend line, and then it can give way. Now, there's a chance, of course, because when is trading ever easy? When? I'll wait. Okay, never easy. So the best we can do is try to figure out what is most likely. So I'm just telling you that I think it's more likely, even if this ekes a little bit lower level here, even if it squiggles a little bit lower, I think it's more likely to see a bounce that tries to get back up towards this descending trend line. See, we get nothing but wicks up there. So now that you know what I'm really thinking, and I know a lot of you, your heads are going to explode. You think I'm talking about oil coming back up to maybe as high as 80 in the next 30 days, when most people are looking lower. And I agree that the overall structure, I mean, it's no denying it's bearish, right? We're making lower highs. Now we made a higher low here, but now we've got two lower lows back to back with lower highs coming down. So yeah, the structure is bearish. Now, with that in mind, let's now drill down in crude oil and look at the structure. Isn't it interesting? I've noticed this. I don't really do correlations. I know a lot of guys are always correlating things. The beautiful thing about Elliott wave, we don't need correlations. It's each chart on its own. It's Fibonacci. That's all it is. Having said that, there are so many times this year in particular, I've noticed silver moving in a very similar waveform to oil. I just say it as a curiosity, because when you're performing analysis, I think most professionals will tell you this, they're performing it, it's repetitive. Like your methodology, it's going to be repetitive. You're performing the same thing over and over again. So sometimes you start to notice similarities between instruments. I'm not suggesting at all that they're correlated. In fact, I encourage you to forget correlations. However, when you're performing a methodology, you will start to notice certain things repeatedly, and you're going to recognize this pattern in crude oil on the lower time frame because it's very similar to silver in the sense that we may have a 3 of C in place. So it's these you recognize this blue area, same story. Are we going to get a bounce in crude? This is really looking good, by the way. Why? This looks like an A wave. This looks like a B wave. It came up high enough to be a B wave. And the structure is kind of janky, which is very typical of a B wave. And then we have a 1, 2, 3. And wave 3 looks ideal because you have a 1, 2 inside of it. As you know, Elliott wave, it's fractal, right? Markets are fractal. So inside of wave 3 should be a 5-wave structure. Now, look, I don't want to make this video into an educational video, but I'm just going to say it just in case you don't know. I think most of you know this by now. Waves 1, 3, and 5, a great majority of the time in a standard impulse, are going to be composed of 5 waves. Is this a hard and fast rule? If it's an impulse, yes. If it's an impulse, waves 1, 3, and 5 are going to be composed of 5-wave moves. So in this wave 3, this you can see this with your eye without even measuring anything or putting labels on it. 1, 2, 3, 4, 5. So this is a very reasonable place for wave 3 to be done. If this is true, we're going to see price come up into this blue box, and we don't want to see it get above the level of wave 1. This is exactly what I was just saying in silver. So what's that? 75.36. I like to get it exact just because I'm a little bit retentive about that. Also, sometimes price likes to hit these levels to the penny. So I like to make sure that I've used my magnet and gotten the thing exactly on that level. It's just something that I do, especially with the fibs. But here you go. So 75.36 is the first parameter that I'm giving you for crude oil. If this structure is going to play out, you don't want to see price get above 75.36. You expect a bounce, and then you're going to get a small 5-wave structure. And guess what? As I just explained in silver, the yellow fibs are what I use for any 3-wave structure for an ABC, with the ideal target being anywhere between the 100 fib and the 1382 fib. Now, in this case, I'm actually clocking the white 5-wave structure for this C wave. It happens to be what I think is C of B, but without getting crazy and complicated here, keeping it very simple, same timing fib lines. So if price gets above here and to the right of this blue line, it is not a wave 4. So if price ends up over here in this area, it is not a wave 4 anymore. That right where I'm putting that wave label is just about the max you can allow this to be a wave 4. So guess what? If it comes up above there, we're going to look at the structure and discern, do we think this is really just another B wave? Or is it coming up impulsively and this is the low? Same exact thing I just explained in silver. So the parameter to the top side is 75.36. If this gets rejected in this blue box, I'm going to measure again and try to see where might this wave 5. At the moment, the white fibs go with this white structure, and there is a fib right here at the 2618 at 72.53. So, but anywhere between this 100 fib and this 1236 fib would be very reasonable for a B wave to terminate. For a C wave to terminate. And then guess what? These fibs right here. Now, if you're in Armando's club, you're going to already know this is the magic zone that we often see reversals happen between the 618 and the 886. And I happen to know that B waves, a very common thing, is to see a B wave exceed the 764, get in between the 764 and the 886. That is where this B wave is. But it's based on the smaller degree structure, which is what these fibs are about. But it happens to line up with this larger structure, B wave fibs, which are between the 764 and 886. So I find this to be a very reasonable view. So again, the parameter is 75.36 to the upside. You don't want to see it get below 71.46. 71.46 is an important level. Those are the only two parameters that I'm paying attention to in crude oil. I just gave them to you. 71.46 for the downside. Bulls do not want to see that level get broken. And if this structure is going to play out and give you an ideal area to get long from, then you're not going to see above 75.36. And that should really happen in this zone. In other words, this nano structure, that's just call it 7 p.m. On Monday. So you've got between the Sunday night open, all day Monday to see if oil's going to bounce. And then sometime in the Asia-Europe session, it's going to roll over. That's the ideal, and give you a 5-wave move down into here. Stop everybody out who got long here. And this is where I'll be adding longs. Cool. All right. So that's the deal. Now, we're going to do the last one, which is natural gas. I got to say about natural gas, I only have started trading it again just recently after not touching it for over 3 years. It's a wild and crazy instrument. But I feel confident because I'm in the room with the professor. By the way, the professor trades room. The link is in the description of this video. It's also scrolling across the banner. For less than $1 a day, the value is undeniable. It can't be beat. And guess what? Same link. If you click the link, you can come join what's called the Traders Lounge. When you click the link, look for the Traders Lounge. You have to scroll down and move some stuff around. Find the Traders Lounge. You can join it for free 99. That's free 99. You can come in there. You're going to get some charts. You're going to get engagement from the members. And you're going to get a taste of what it would be like to be in the club. But you're not going to get all the good stuff, the real actionable levels. But we do drop charts in there. So come check us out for free. Ask some questions. And at least you're in the club, in the trading club. But Armando, the professor trades, has got me looking at natural gas again. He's managed to trade it safely. If you could ever say that about anybody, it would be Armando. And natural gas is a crazy, wild instrument. But I've witnessed some pretty amazing things coming from Armando at the professor trades. For less than $1 a day, it's a no-brainer. Anyway, so he's giving me the confidence to take a look at natural gas. And I happen to have a long position on right now. All right, let's dive into the natural gas chart. And just as with the other two instruments, we're going to look at the daily chart first and sort of get a lay of the land and then drill down. Now, the crazy thing, and again, I changed my log. Yeah, I don't want to be on log. So actually, I changed the continuous versus front month, and it screwed up some of my levels. But for the purposes of this video, I'm going to keep it very simple. So what's been going on with natural gas? Look at this crazy instrument. It's really noticeable how nutty this thing is if you pull up a weekly chart. I mean, it's just madness. Look at this. Look at how much this thing moves. It is just a cray instrument. The exciting thing is after this massive move down here, we finally got a structure that could be complete to the downside. So there could be a significant bounce forming right here. Okay. And just to give you an idea, just doing like a quick and dirty measurement in terms of a projection using the idea behind Fibonacci and Elliott wave. This thing can really bounce, okay? Really bounce. But let's say it doesn't give a strong bounce because we're in a downtrend. There's no denying, right? It keeps making lower lows, keeps making lower highs. It's in a downtrend. But look at these wicks, and it's bouncing, okay? It's bouncing. And it had a chance when it came back down here to make a lower low, but it didn't. And then it bounced again. So this level right in here, it's treating this level like a hot stove with these wicks. So having said that, though, I don't think it's bullish necessarily. So to be conservative, if this is just going to be another three-wave move, 1875. Let me put the magnet right on that thing. Yeah, 1875. Then even if it's just another three-wave move, the minimum for that is going to be back up here into these wicks. And that's 294. Well, I'm already in from down here. I'm in from over here. So if that thing makes it up to 294 or even close to there, I'm taking the gains. And this is also the next parameter. So can this get above 294? If it can, the next, I mean, really, you're looking at these next fibs. That's like another 100 points. And then after that, it's another 50, 60 points, the next fib above that. So the internal structure, which we cannot see at this level because we're on the weekly chart. Let me go down to the daily to get a little bit more detail. Then we're going to hop down, just like we did with these other instruments, to see what is possible. So I know there was a contract change. That's why this is looking a little funky. Yeah, I'm not going to get into that for right now. Let's okay, so you have the picture in your mind. The idea is we're bouncing, and the question is this just a dead cat bounce and we're about to break these lows and go much lower? Because that's what's going to happen if we break this low, we're going much lower. So all I'm looking to do is try to rob the cookie jar while I have a chance. And so now we're drilling down, looking at Elliott wave in greater detail, using futures, looking at the October contract and futures. Now, what's interesting is this is a 5-wave move. And let me just go down in time again, just so you can see a little more detail of the wave structure. 1, 2, 3, 4, 5, followed by a 3-wave move. And yeah, I know it's crazy, but this is a very good C. This is actually a very good ABC move. And look at the reaction. Now, here's what I'm thinking. This could be 3. This is holding where a wave 4 should hold, especially if that is the top of wave 1, which, as I was just explaining, we do not want to see price come down and get. Now, look, there is a bunch of liquidity down here, especially if you look at it on a larger candle. Look at this 1-hour candle. There's a lot of liquidity down here. So, but I'm thinking after this tops, then maybe it's going to come back and grab that and keep going. Okay, but that's just pure speculation. So back to keeping it simple, back to parameters. 2.076, 2.076. Do not want to see it come back below there for sure. I don't even want to see it coming back here. What I want to see happen based on these parameters is that, watch this, see these yellow fibs? Again, trading is repetitive. The measurements I'm taking, I'm repeating in every instrument over and over because that's the way it works. This could be an A wave. This could be a B wave. And if so, this is where the C wave would terminate. And you know what I really like about this potential? What I really like about this potential is the fact that there is a lot of confluence up there, right exactly in this region. Okay, the first idea is if this is 5 waves, this being the third, this being wave 4, and then now we're in the 5th wave, this measures perfectly for the wave 5 to terminate inside of this ratio box. So that's the first area that is a parameter, is this ratio box, 2184, 2206, 2.206. That's the first area, region, zone. The second one is this ABC measurement, which projects almost dead in the center of that zone. Okay, so that is another ideal scenario. If it is going to keep coming, and if it makes it up to this zone, all the way up to here, then I will view this as something much more bullish. In other words, if it can just plow through, if it can get through this zone and poke above up here, then what we're going to do is measure and look for that area to hold here. So basically, the parameter I'm giving you to the downside is 2.076, and we want the target to be, the ideal target at the moment is 2.193. So call that the target. This is the target zone. My longs, which I added to over here, and I still carried over here. I actually added down here, and I added here. So I'm a little bit heavier than I would like to be because this is somewhat of a swing trade. Then the target, I'm taking it all off in this area. And what I mean by that is I'm going to take off like half of it right at the minimum, 2.184. I'm taking half of it. And if I'm lucky enough for it to extend up here, I'll take maybe half of the remaining half, so another 25%, just to see if it keeps extending. That's the deal. And what I'll do during the week is drill down on the lower time frames to dial in more exacting levels. But again, in this video, I'm just giving you the quick and dirty, right? So each instrument, I just gave you 2 or 3 parameters, very simple, based on the structure of price following Elliott wave, right? The structure of price is really king because price is king. So if you can learn how to read price action, you have a methodology. I don't care what your methodology is. Find one, develop it, learn it, and then use it. Use it for the parameters. Then you can make your bias. You can create your trades based on your own bias of where you think it's going in relation to those parameters, but you're going to know where you're wrong. And that's fantastic. That's a fantastic thing to know where you're wrong. So in other words, the days of, oh, this trade went against me, but so I'm just going to add to it. Oh man, it just kept, well, it's got to go up eventually. So I'm just going to add again. I mean, if you've ever done that, I highly encourage you to join the Professor Trades Club and learn how to get parameters based on structure. And you're going to get that from me as well. Even in these free videos, you're going to get parameters. I just gave you 3 instruments. We'll see what happens. Good luck. I hope to see you in the room. I know many of you have joined from YouTube. I love it. I love to see you guys coming through as a result of clicking the link. The more the merrier. We're going to get you schooled up. You'll never blow up another account again. You'll never move your stop and play games with yourself about your stops. You'll never not take your profits where you're supposed to and think, wow, gosh, now I'm finally up. I'm just going to let it ride because it's going to keep going. And then now you got your emotions involved. We're not doing that. You come in the club, you're getting supported by a bunch of like-minded people led by Armando. And what's going to happen is your trading is going to improve immediately. I've seen it. I've been watching it happen for what is this, August? So I've been in there for, in November, it'll be 1 year. And it's a no-brainer at less than $1 a day. But what I've seen over that almost year, folks coming in and changing their game, being honest about things, and following Armando's leadership, he has a knack for getting you to calm down and teaching you about mindset, mainly because he's demonstrating it. He's demonstrating it with his live trades. All right. Anyway, that's my plug. Thanks for watching. If you like the video, when you give me a like, it encourages me to keep doing this. It takes a lot of time for me to do it. I love doing it and I love sharing. But when I see those thumbs up and a few of you subscribing, that tells me that I should keep doing this, because I certainly don't have to be doing this. I enjoy it. But your thumbs up really give me an encouragement. If you have questions about Elliott Wave, or you're not sure about a parameter, drop it in the comments. Ask me a question. I promise I'll get back to you. All right. Thanks again for watching. I sure do appreciate you guys. And remember, whatever you do when you're trading futures, don't get killed. Real talk. All right. See you in the room, the Professor Trades. Take care. Bye-bye.